Sarat, let me start with you first. Things are looking pretty bullish these days. How healthy do you think this bull market is?
I think, Becky, we're going to see a little bit of a crack in it. Things are a little too good everywhere. Interest rates are low. Investors are, Robin Hood went public. I think there's a little froth here. I would expect a little bit of pullback. Companies have done well in earnings season, but valuations are still high. And I think as we go through the summer and we see the jobs report and we see the economy actually, I think actually improving over time, I think the stock market's a little bit ahead of itself. Not to say that by the end of the year, I think we're going to do fine, and I think the market's going to be up. But investors have just become a little too complacent, and every time there's a 1% pullback, people dive in. So I think there's going to be some good opportunities if you've got cash on the side.
To go ahead and buy on those dips, you mean?
Yeah, I think especially we see a 3 to 5% dip, and we really haven't had one since October. So there are some companies, and underneath this bull market, we've had these rolling corrections. And if you look at the sectors like financials, even select technology, industrials, there are stocks out there that you could buy. Companies that you just mentioned, Uber. Uber's off its peak; it's down more than 10%. So we like the American Expresses, the Morgan Stanleys of the world. These are cheap companies that when they get cheaper, they're good to buy. And I think they're going to be good long-term holds.
Gene, let's run through some of your favorite picks right now, too. You think Apple is best positioned at this point. Why is that?
Becky, 3/4 of Apple's revenue has a tailwind, multi-year, 3 to 5 year tailwind. This is the iPhone, the Mac, the iPad. Of course, this comes from work and learn from anywhere. What we're seeing right now regarding Delta, I think that is just reinforcing to people to always be prepared. And then you have the 5G catalyst. That's a multi-year upgrade. Less than 5% of the globe is on 5G. That's going to go to 50% plus. There's also a near-term catalyst with Apple with their event coming up here in September. I think when you put all of this together, this is a $200 plus stock in the next couple of years. And even though it's so obvious, there's other big categories coming for Apple, of course, health, wellness, and auto. And just quickly, a second company I would be very focused on, gets a lot of attention, but still I don't think at full potential, which is Tesla. They have their artificial intelligence day coming up later this month. But this is a quick, fun takeaway is that there is a lot of talk about the 2-year growth rates in the last big tech earnings call. Tesla is the only company of big tech, Microsoft included, that is seeing a remarkable acceleration from where they were growing at the end of 2019, going from 20% to 40% growth.
Wow. Hey, Gene, real quickly, let's talk about Amazon. It is one that people are watching pretty closely. It was down 8.5% last week. You like this stock, though?
We do. I think that they really embraced the bad news. They flushed a lot of the negativity in terms of what's going on with the hard comps. And obviously, we've got a new CEO that may be wanting to temper some expectations. At the end of the day, it's very simple. No one's going to compete with Amazon. There is less than 15% is bought online today. This is things that we always know. It seems painfully obvious, but I think that Amazon has a wonderful opportunity. They also have 1.2 million employees. There's a huge opportunity to bring in more automation to finally, I've been waiting 10 years plus for this, to improve their margins.
Shepard Smith here. Thanks for watching CNBC on YouTube.